To talk to us about all of that, we're joined by Kaustup Paskar from PNB Paribas joining in with us this afternoon. Kaustup, very good afternoon. Thank you so much for joining in with us. And Kaustup, I'm just going to pick on this point. What we are also understanding is that, now raw material prices have been, quite subdued, declining for the last couple of quarters. Finally, it seems like, FMCG companies have been taking this grammage increase, and this is very rarely that we hear happening from FMCG companies. Do you think that will be something that will finally help support the growth for FMCG companies, which has been subdued, or even in Q3, we've not seen anything exciting in terms of operational update?
Yeah, so there are two aspects to it. One, obviously, they want to pass on the benefit of the lower raw material prices to the consumer. So we have heard that rural demand is yet to pick up, and this is what a commentary we've been hearing for past 3 quarters, and in this quarter updates also the commentary remains the same. So the company wants to uptake the demand into the rural market, so they want to push volumes in the rural market, and this can be done through reducing the prices or increasing the grammage volumes, which will help them to see a better uptake. Second important factor is that the competitive intensity from the smaller and regional players have gone up substantially, and that is also hurting FMCG companies at the bottom of the pyramid. So to reduce the competitive pressure, this is the strategy. We might see most of the companies implementing either giving grammage offerings or promotional add-ons, or reducing the prices because to reduce the competitive pressure in the quarters ahead. So I think this strategy, I believe most of the companies might, large companies might implement in the quarters ahead.
Okay. Obviously, Kaustup, other than that, also, I just want to understand, in terms of Q3 updates specifically, when you're comparing a Titan versus Kalyan, nothing exciting that we've seen happening, from Titan at least. Kalyan continues to see a stronger growth. Is that something, what is a differentiating trend, that is leading Kalyan to see a better growth while Titan has been subdued? They're also highlighting that the studded jewelry sales have not been as high as the gold coin jewelries, and this is despite being that festive season. So any indication that we should pick up from this for the retail side or, jewelry retailers for it?
See, Titan's performance, if we compare it to the quarter to FY 2023, it's quite strong considering the high base. So 20% growth in the jewelry business is quite strong. And if we go through the press release, they have seen uptick in footfalls. They have not specified anything much on the mix improvement on the studded part, but I believe that considering the decline in the diamond prices and the significant increase in the gold prices, I think there might be some kind of increase in the studded jewelry mix, considering the demand or the trend has been seen that there is a uptick in demand for these studded jewelry. But we have Kalyan Jewellers in their update. They have clearly specified that they are seeing a good uptick in the studded jewelry, and also I guess for Kalyan it is more of a store addition, and the region where they are spending also they have a good mix of the wedding jewelry. So I think considering the Titan's performance, I think the performance, if we consider it with Q3 FY 2023, the performance is quite strong, considering a 20% kind of a growth in the jewelry business. However, more on front of the mix, and also how the demand is shaping up, considering the gold prices going up substantially in past few days. So whether it will have any impact on the retail jewelry sales, considering the wedding season, which is expected to continue till February and March, whether it will have any impact on that, that is something which will be keenly monitored by the street.
Kaustup, Soumit also joining into the conversation. Now, from both Godrej Consumer or Marico, we have seen that the demand trends in Indian market is kind of bit sluggish. Now, with this grammage increase that companies have taken, do you expect growth to be on a higher trajectory now going forward, or will demand continue to remain sluggish for a few more quarters?
See, the sluggish demand environment is mainly because of the fact that rural is yet to revive. And if government come up with a plan to revive the rural demand in form of more pucks coming into the rural market, and we believe that since it's the election year, we might see government focusing on reviving the rural economy, and that might augur well for the FMCG companies. So we should, if we should expect some bit of improvement in demand from Q1 of FY 2025, since inflation is also has reduced. Companies passing on the benefit to the consumers in forms of price cuts, grammage increase. I think the benefit of all should start coming in the quarters ahead. And if all goes well, monsoons next year if monsoons turns out to be better, then I think it should help in some bit of revival in the rural demand, and that will help the overall volume growth momentum to improve for the FMCG companies. But barring that, urban consumption is quite strong. Their entry into premium categories are doing well. So I think the medium to long term outlook for the FMCG companies remains strong, and we should expect the margin expansion to continue till the time raw material prices remain benign, and that should support to the overall earning growth in the coming quarters.
Well, thank you, Kaustubh, for joining us and giving us all those insights about the FMCG trends going ahead. With that, let's slip into a short break and we'll be back with more news on the other side.